Come on guys, let's now discuss chapter 15 of your syllabus, which is branch accounting. One of your favorite topics which has hardcore accounting to it. Let's begin. So in this topic of branch accounting, to do accounting, we divide the branch into two categories. One, branch there, branch which is situated within the geographical boundaries of the country. That's called as inland or domestic branch. The branch which is outside the geographical boundaries of our country, which we call as foreign branch. We'll discuss foreign branch towards the later part of our discussion. Right now, our focus will be concentrated inland or domestic branch. Further, inland or domestic branches will be classified into two categories: dependent and independent. Dependency is in the business world seen slightly different from the accounting. In the business world, it is based on the operative and financial decision making. The branch is dependent on the head office for goods. The branch is dependent on the head office for money, decision making, sale price fixation, hiring employees, location of business. Then it is dependent branch. In business world, but in this topic we are only focusing on accounting. In this topic we decide a branch as dependent branch if the branch does not have accounting, and accounting of the branch should be done by head office, then it is dependent branch. On the other hand, if the branch has an accountant, the branch can do its accounting on its own, the branch will not be called as dependent branch, it will be called as independent branch. Right now our discussion is now focused to dependent branch. Later we'll come back to independent branch. Further, for the purpose of accounting, this dependent branch can be classified. This classification now this time is based on the rate at which head office will choose to send the goods to branch. If the head office decides to send the goods to branch at cost price or invoice price, treating the branch like a debtor, it will be treated as accounting to be done under one of the three methods: debtors, stock debtors, and final accounts. However, if the head office treats itself as a wholesaler and treats the branch as a retailer and sends the goods to branch by booking the wholesale profit, then we'll apply another method called as wholesale price method. Now we'll focus on these three methods: debtors, stock debtors, and irrespective of the fact whether you use debtors method, stock debtors method, or final accounts method, you end up getting the same profit as others. To begin with, let's see debtors method. Under this method, head office will treat the branch as a debtor and branch owes money to head office. Head office in its books will open one ledger which is like debtor, but it will be called as branch account. That branch will be one separate ledger for every branch. Let's say I have 4 branches: Chennai branch, Hyderabad branch, Mumbai branch, Pune branch. I will open one ledger for each of them. Chennai branch account, Mumbai branch account, Pune branch account, Hyderabad branch account. We'll open 4 separate branch ledgers. Each branch account, debit side I'll write the opening balance of assets in the branch. It can be stock, it can be furniture, it can be any other asset, cash balance, bank balance, debtors, everything that's there at the branch as an asset is mine, and I'm supposed to receive it from the branch. So in my branch account, I would write all the opening balance of assets on the debit side. All the closing balance of the same assets will be written on the credit side. See, branch asset, branch debtor, branch cash, branch petty cash, branch stock, all of them. If in case at the branch there is some liability, opening balance on the credit, closing balance on the next, whatever I send to branch will be written on the debit side, whatever the branch sends to me will be written on the credit side. Then if I find the balancing figure, that would be my branch. And in this process, throughout the accounting when it is done, head office is treating branch as a debtor. If you send something to branch, value at the branch will increase, debit the branch. If you receive something from the branch, value at the branch will decrease, credit the branch. Basically, branch is your debtor. That's what I did mention. And next thing that you would have to have is assets, debit side, opening balance, closing balance, credit side, liabilities, opening debit balance, credit balance, closing debit side. And there are certain transactions which are ignored. If the transaction is happening between branch and third party, head office will not do accounting. This is because accounting is done for the branch but by the head office. Accounting is done for the branch but it is done by the head office. This is debtors method. I can discuss journal entries, but I'll keep it pending for now. What will I do? I'll teach you stock debtor system and we'll see debtors and stock debtor system journal entries simultaneously. Flip to stock debtor system. Under stock debtor system, what we do is we'll treat the branch as a debtor, but there is a small upgrade. This method is improvised version of debtors method. Under debtors method, like I mentioned in the ledger, We write opening balance of assets on the debit, closing balance of assets on the credit. In that opening balance of assets, it is not asset but assets. There are several items that are stock, furniture, cash, petty cash, so many things. Now for each of them, we'll start opening separate ledger. That improvisation will shift it from debtor to stock. We'll cut that one big branch account into 4-5 ledgers. That will become stock debtor. Under debtor system, I told you certain transaction which involves branch and somebody else. We used to not write entry. Here we write entry for. Let's see the transactions and the entries for. To begin with, if the goods are sent to branch, under debtors method, the journal entry is branch account debit to goods sent to. However, under stock debtor system, it will not be branch, it will be branch stock account debit to goods sent. Later, this goods sent to branch will be deducted from the purchases of head office. So the entry is GSB to purchase. That's the follow through. Then, if the expense is incurred at the branch, it can be paid by head office or it can be paid by branch. If the expense which is incurred at the head office, if the expense which is incurred at the branch is paid by head office will write the entry branch to cash under debtor system. If it is stock debtor system, we will not write branch, we will write more specific name. We will write branch expense account debit to, and later this branch expense should be transferred to branch P&L. The end. I'll teach you the entry for that. If in case the same branch expense is not paid by head office, but it is paid by branch, under debtor system will not write any entry because this transaction affected between branch and third party. However, if the expense of the branch is paid by branch and we are maintaining stock debtor system, we do write entry. Here we don't write because the entry will be branch to branch, but here it is not branch. Branch expense account debit to branch cash. We don't write entry for this under debtor system because under debtor system, one ledger what we open, that ledger itself has expense account, that ledger itself has cash account. So it will be reflecting both debit and credit aspect in the same ledger. So we ignore it under debtor system. Under stock debtor, that one ledger is cut into 4-5 ledgers. So expense is debited in expense ledger, cash is credited in a different ledger. So we can do write a journal entry. Next, if the goods are sold at the branch, it can be credit sales or cash sales. Under debtor system, for both cash sales as well as credit sales, there would be no journal entry because this transaction is affected between branch and third party. However, if it is stock debtor system, we usually write journal entry for credit sales, debtors to sales. Here we will not write debtor to sales, we will write branch debtor to branch stock. Sales account is not maintained, we call it branch stock. If in case it is cash sales, our usual journal entry is cash to sales. Here we will not write cash to sales. We will replace cash with branch cash and sales with branch stock. That would be the accounting entry. Sale of goods, not cash and credit, for which actually there is no entry under debtor system. Next, in case we are doing collection of cash from debtor, under debtor system there is no entry. Why? Cash is also there within branch account, debtors is also there within branch account. So two items, debit credit, are in the same ledger. However, when you do stock debtor, it's broken into several ledgers. Usual entry for collection is cash to debtors. It will be branch cash to branch debtors. That. Next, what if there is bad debts or discount allowed? Again, under debtor system, there is no transaction, no journal entry because it is transaction affected between branch and third party. Or if you have to write that bad debts or discount is identified as profit or loss impactful item in branch, debtors is also there in the same ledger. So you don't have to write it separately. If you write opening and closing balance of debtors, closing balance after deducting cash collected, bad debts, discount, automatically the difference will impact our profit. However, under stock debtor system, we do have to write an entry. We can write it as branch expense account debit to branch debtors. Usually we write bad debts to debtors. Bad debt is replaced with branch expense and you can credit branch. As a shortcut, instead of writing branch expense, you can straight away post it to branch PL. That will save your effort in opening one ledger. Next, we have with us goods returned by branch. Whatever goods we had sent to branch, branch is returning it back to us. We will reverse the entry what we had passed here. Here we wrote the entry branch to GSB or branch stock to GSB when the goods were sent. When the goods were returned, we will reverse it and write GSB to branch or GSB to branch stock. Next is goods sent by one branch to another branch. When the goods are sent by one branch to another branch, it should be treated like goods are sent by branch to head office and head office to another branch. Same entry for GSB return. If you see GSB to branch, GSB to branch. GSB to branch stock, GSB to branch stock. Next we have with us branch remits cash to head office. Branch is giving cash to head office. Head office is receiving cash. Head office will write cash account debit to. Under stock data system, we will not credit branch, we will credit branch cash. The cash is paid directly by debtors or outsiders to head office for the sales made by branch. Then it will be same entry like what we wrote before. Cash to branch under debtor system. Under stock debtor system, we write cash account debit, but it is not reducing branch cash, it is in fact reducing cash. Credit will be given to branch debtors. Next we have with us goods sent to branch but not reached branch yet. The goods are sent to branch. Head office has written the entry goods sent to branch to branch to goods sent to branch is sent. But that branch cannot sell the goods, branch cannot keep the stock in its closing. So we would have to write it in an account called Gita. Goods in transit account debit to branch. In branch ledger, we'll write on the credit side. Gita. And in stock debtor system, it is not Gita to branch. Goods in transit to branch. It should be written as goods in transit to branch stock account. Next, we have with the same thing can happen with cash. Cash is sent by head office, not received by branch. In the branch debtors account, it will be written as Sita to branch. Or you can write Sita to branch cash. And normal loss, abnormal loss, usually there is no entry under debtor system. Under stock debtor system, we just have to still write the entry. It will be debited to branch adjustment where we usually remove load, credit branch stock because stock is decreasing. However, if it is abnormal loss, then we'll write branch adjustment account to the extent of load, branch P&L account to the extent of cost, and total invoice price will be credited to branch. And then we have insurance claim. If in case on this abnormal loss, if you have insurance claim, and if insurance claim is received by branch, head office will write no. In this case, we can still write cash account debit to branch P&L, branch cash to branch P&L. If head office receives it, it will write cash to branch under debtor system. Under stock debtors, it will write head office cash to branch P&L. Understood? Ultimately, all of this is done to determine profit. Once we find profit, that profit will be transferred from branch P&L to head office P&L under debtor system. Head office P&L will be credited, branch P&L will be debited. And one thing that you would notice in stock debtor system, to identify profit, close every ledger, close debtors, close cash, close expense, close petty cash. In this, if there is any balancing figure missing, find that number and then close it. After you close all the expense ledgers and then post it to branch PL, then you close branch PL to determine the profit. Hope you guys got this. And another thing that you should note in branch debtors and branch stock debtors system is, what if the goods are sent by head office to branch, not at cost, but at invoice price? In your debtors, opening balance of stock will be on the debit, should be there in the branch stock account at cost. It is there at invoice price. On the credit side, we should remove load. See, branch stock in the debtors account be there at cost. It is at invoice price, we remove load on the credit side using the name stock reserve. In the credit side, closing stock should be at cost. If it is at invoice price, we remove the load on the debit side using the word stock. Exactly similar to this, if in case our branch goods sent by head office, if it is at invoice price, still goods sent to branch. If it is at invoice price, load is removed on the credit. And similarly, on the goods sent to branch returned, if there is invoice price, load is removed on the debit side with the same thing. Opening stock, closing stock, goods sent to branch returned in the debtors ledger should be at cost. If it is at invoice price, remove the load on opposite side. On opening stock, load removal on credit side. On closing stock, load removal on debit side. And GSB, load removal on credit side. GSB returned, load removal on debit. Opening and closing stock, load is removed by the name stock reserve. On GSB and GSB return, load is removed by the name same name. This is under debtor system. Under stock debtor system, if you have to remove load, something what we do is very easy and simple. Whatever the item is there in branch stock account, if it is at a higher price, for example, opening stock, load will not be removed in the branch stock account credit side. We'll write it in branch adjustment account credit. In the stock account, closing stock is at invoice price. Load is removed on the debit side, not of branch stock, but in branch adjustment account. GSB in branch stock account, if it is there at invoice price, then on this the load will be removed on the credit side, but not in branch stock, but in branch adjustment. Goods sent to branch returned, what is there in the credit side of your branch stock account will be removed on the debit side, but not of branch stock, but in branch adjustment. This load on goods. Load will not be removed on sales. Load will be removed only on opening, closing, goods into branch and goods into branch. By doing this, you will be done with your debtors and stock debtors method. Then comes the third method, which is called final accounts. This is our traditional approach, preparing trading account and P&L account. Usually what do we do? Trading account, opening stock, purchases, sales, closing stock, GP. GP you bring to P&L account, expenses, income, GP, MP. Same thing we'll do in branch. But in the trading account, stock items like opening stock, purchases, closing stock should be always at cost price. Sir, what if we've sent the goods at invoice price? Something very simple. Remove load. Right? Opening stock, inner column invoice price, minus load, outer column cost. Purchases won't be there. Goods into branch will be there. Goods into branch at invoice price, less load, outer column cost price. Closing stock at invoice price, inner column, minus load, outer column cost. Find GP, bring it to P&L. That's it. That's how you do problems under stock debtor system as well as final account. Let's proceed on to the next method, that is wholesale price method. Wholesale price method is followed when the head office will treat itself as wholesaler, it will treat branch as a retailer. Head office will transfer the goods to branch at wholesale price, branch will sell the goods to customers at retail price. This is similar to invoice price, but it has its differences. Head office, usually if the cost was 100 and if it was sold to end customer at 150 by the branch, head office used to book 50 rupees profit through the branch. Cost 100, branch sold it for 150, branch will book 50 rupees profit. Head office used to book branch profit in its P&L account. But under wholesale price method, it is different. Head office will tell my cost 100. If any other retailer comes, I'll sell it to him at 130. He will sell it to customer at 150. It will treat branch as a retailer, head office as a wholesaler. Head office on every unit sent to branch, head office will record 130 rupees sale price, booking 30 rupees profit. Later when the branch sells the goods to customer at 150, branch will book 20 rupees profit. So same 50 rupees profit under debtor system, stock debtor system, final account system. Branch used to book full 50 profit and that was later transferred to head office. Under wholesale price method, head office books 30 rupees profit, sending the goods of 100 to the branch at 130 wholesale price. When the branch sells that 130 rupees goods to customer at 150, branch will book 20 rupees. Later the 20 will come back to head office, but 20 will come to P&L of head office. 30 will be there in trading account of head office. That is wholesale price method. Under wholesale price method, head office sends the goods at wholesale price to branch, branch sells the goods at retail price to customers. Cost plus wholesale margin or load is what we call as wholesale. This wholesale margin is profit booked by head office. Wholesale price plus retail margin is retail selling price. This retail price is the profit booked by branch, which is anyways later transferred to head office. And because as I am head office and I have sent goods to you at 130, if you sell it, you book 20, I book 30, no problem. If head office has sent the goods to branch at 130, branch has not sold that goods and it is remaining in closing inventory, it will be there at 130. So head office has booked 30 rupees profits on goods sent to branch. The branch has not sold. Like how we do in amalgamation and consolidation, we can call it unrealized profit. On the closing stock remaining in the branch, profit which is already booked by head office should be reversed. Unlike debtor, stock debtor, final account system, where we remove load on opening, GSP, closing, everything. Here, we remove load only on closing. Closing stock is there in the branch account on the credit side at wholesale price. On that load will be removed on debit side, not in branch account. Head office P&L account. Why? Head office has booked profit no on that sale. I recorded that 130 rupees as sale and I booked 30 rupees profit in my P&L. It has come to my trading to my P&L, it's come, but you have not sold that goods. So to you cost is 130, but you are ultimately extended part of my business. I should reverse that 30 rupees profit. So 30 rupees, that is unrealized profit on the stock lying unsold at the branch, will be written on the debit side in P&L account of head office. That, my friends, is wholesale price. The ledger will look somewhat like this. We'll prepare a proper trading account. Opening stock should be at wholesale price, goods into branch at wholesale price, and then we'll write goods into branch returned at wholesale price, sales at selling price, closing stock and abnormal loss at wholesale. Will determine profit. This GP what you get, it is not total profit. It is not 100 and 150. It is 130 wholesale price and 150 retail price. 20 rupees profit at the branch. And we'll write branch expenses and then transfer. And whatever here closing stock is remaining at the branch, on this stock, load will be removed in head office P&L. And on the opening stock, previous year's closing it was, the load would have been removed last year, that will come in credit side in head office P&L. Remember, in head office P&L, on the opening stock, load will come on the credit. On the closing stock, load will come on the debit. Previous year's unrealized profit is realized this year. Current year is unrealized profit is postponed to next year. In P&L account of head office, previous year's unrealized profit, opening stock's unrealized profit is booked as profit. On the current year closing stock, will reduce the profit by debiting it, postponing it to next year. That's our wholesale price method. And in the next video, we'll see how to revise quickly with regard to your independent branch updation, that is abridged consolidation, detailed consolidation along with foreign branch.